Good afternoon, and welcome to the Freddie Connect session, New Possibilities for ADUs and Choice Renovation Mortgages. Audience members are in listen-only mode. This session is being recorded and will be available following the conference. To submit a question, please use the Q&A box at the bottom of your screen. If you experience any technical issues, please use the Q&A box and someone will assist you. Lastly, you will find icons at the bottom of your screen with links to the speaker bios and the presentation deck. Our moderator today is Kelly Morocco, Director of Affordable Credit and Policy in Freddie Mac's Single Family Risk Management Division. Our speakers today are Julie Campbell, Jeremiah Cruzan, and Randy Fansler. With that, I will turn it over to Kelly.
Hi, everyone. Thank you for joining today's session on ADUs and choice renovation. We're really excited that you're here today. I believe we have a lot of great information to share with you, and we also want to leave plenty of time at the end for questions and answers. Today, we'll discuss both our new flexibilities around accessory dwelling units, or ADUs, and then jump into choice renovation. Before we roll into the details of our recent expanded policies around accessory dwelling units, or ADUs, I want to give you some background on how we got to these policies. Our team spent approximately 18 months reviewing existing policies, completing research on new zoning across the country, participated in a 4+ hour listening session held by FHFA to understand the market need, and listened to a White House briefing on ADUs. In addition, we conducted outreach to lenders, appraisers, and other industry stakeholders to better understand the market need. I think the quote above captures how we feel, that these policies are better because of the input from so many. What we heard from the market included 3 main topics: allow the use of rental income for an ADU, allow ADUs on multi-units, and allow the payoff of short-term financing to construct an ADU to be paid through a no cash out refinance. Now let's unpack how we wove the market ask into our policies to provide more flexibility to assist with affordability, housing supply, and sustainability. So how about we start with Randy first to provide an update on our ADU expansion from a collateral policy perspective. Randy first joined Freddie Mac in November of 1999 and worked for 2.5 years as a manager of the Alternative Markets Quality Control Team, traveling across the country reviewing mortgage loan files. After working with the local bank and government contractor, he returned to Freddie Mac in October of 2017 as a collateral policy senior, where he works today writing collateral policy within the Single Family Credit Risk Management Division. Randy, I turn it over to you. Randy's going to set the stage on what is an ADU and how we have expanded our collateral policies to allow multi-unit properties with an ADU.
Thanks, Kelly. Well, as Kelly previously said, an ADU is an accessory dwelling unit. Freddie Mac defines an ADU as additional living area that must include a kitchen, a bathroom, and a separate entrance. By having that separate entrance, it makes the ADU independent of the primary dwelling unit, which is also a requirement. The ADU must also be subordinate in living area to the primary dwelling and contribute less to the value of the property. We have a few nuances to our updated ADU policy that I'd like to point out. First, properties with 2 or more ADUs are not eligible for purchase by Freddie Mac. Second, living area with unrestricted access from the primary dwelling is not an ADU by our definition. The ADU must provide privacy from the primary dwelling. And finally, a manufactured home must be classified as real property, not personal property, in order to be eligible as an ADU. As part of our ADU policy expansion, Freddie Mac will now allow one ADU on 1, 2, and 3 unit properties. An ADU on 2 and 3 unit properties must be legally permissible by jurisdiction, meaning the zoning compliance must be legal nonconforming, or areas where there is no zoning. Typical examples of ADU configurations include a unit over the garage, a unit in the basement, or a dwelling with an attached or detached ADU. As a reference, our guide section 5601.2 provides all our eligibility requirements for a property with an ADU.
You mentioned manufactured homes. Are you saying Freddie Mac will allow a manufactured home to be eligible as an ADU?
Yes, Kelly, that's exactly right. And thanks for bringing that up. Freddie Mac will purchase a mortgage secured by a 1, 2, or 3 unit property that contains a manufactured home ADU. The property must meet our guide requirements for a property with an ADU, which is found in section 5601.2D of our guide. The manufactured home ADU must be a minimum of 400 square feet, be legally classified as real property, as stated previously, and the primary dwelling cannot be another manufactured home, unless it's a choice home. Another important update to our policy is if rental income from an ADU on a subject 1-unit primary residence is used to qualify the borrower. An appraisal report is required. Should an appraisal waiver be offered, the seller must not accept that waiver should rental income from the ADU be needed to qualify the borrower. Since information is required regarding the ADU, the appraisal report is needed to provide that information. So that's about it for our ADU collateral updates. So Kelly, I'll just turn it back over to you.
Great. Thank you, Randy. Great information. Now let's move on to Julie Campbell to present our credit policy expansions for ADUs. Julie Campbell has been with Freddie Mac since March 2017, spending 2 years on the QC team as an underwriter senior until she transferred to the mortgage credit policy team as a credit policy risk analytics senior, where she is working today writing credit policy. She has been in the industry for over 30 years and has worked as a forensic underwriter for 15 of those years. Julie's going to dive into the requirements for the use of rental income generated from an ADU and beginning with the documentation requirements.
Thank you, Kelly. As you mentioned earlier, permitting rental income from an ADU was a market ask, and with our ADU expansion, we now permit the use of rental income generated from an ADU on a subject 1-unit primary residence for both purchase and no cash out refinance transactions. The required documentation for ADU rental income is determined by the transaction type. For purchase transactions, a new or an existing lease may be used with the rental analysis, or if a lease is not available, then the ADU rental analysis will be used to calculate the rental income. For no cash out refinance transactions, there are 2 documentation options depending upon when the ADU is placed into service. When the ADU is placed into service in the current calendar year, a lease and the ADU rental analysis is required, as well as documentation supporting when the ADU was placed into service. When the ADU is placed into service the previous calendar year, complete federal tax returns with the Schedule E are required. An exception is permitted where a lease can be used in combination with the ADU rental analysis when there's a documented event that the ADU was out of service for a period of time, either due to a renovation or if it was purchased later in the year.
Thanks, Julie. Now that we have our ADU rental income documentation, are there special requirements for calculating the ADU rental income?
Yes, Kelly, thanks for asking. The ADU rental income has two calculation requirements. The first is the net ADU rental income to be calculated. When using a lease and the ADU rental analysis, the net rental income calculation will take 75% of the gross monthly market rent, or when using a Schedule E, the net rental income is calculated using Form 92 net rental income calculations or a similar alternative form. The calculation reflected on the top example on the slide is the ADU income of $1,100. Once the net rental income is determined, the maximum ADU rental income is calculated, which may only be considered in an amount up to 30% of the total stable monthly income that is used to qualify the borrower for the mortgage. You will see on the transmittal summary example, qualifying income of $3,000 per month. Applying 30% to the $3,000 stable monthly qualifying income results in $900, which is eligible for the maximum qualifying ADU rental income for this transaction. In this example, the calculated ADU net rental income of $1,100 must be reduced to $900 to qualify the borrower for the mortgage. In addition, please keep in mind that any ADU rental income must be included in the area median income determination when the mortgage is a home possible mortgage.
Julie, are there any other requirements to be aware of when using ADU rental income generated from a subject one-unit primary residence?
Thanks, Kelly. Yes. In order to ensure the market rent is supported, an appraisal is required and must include a description of the ADU and provide at least one sales comparable with an ADU that is rented, a rental analysis with a minimum of 3 comparable rentals, with at least one of those being a rented ADU, and the ADU must be legally permissible by jurisdiction, meaning the zoning compliance must be legal non-conforming, or in areas with no zoning. The slide also includes noteworthy bullet points about landlord education for purchase transactions and that an IFI is required at delivery. You will note that the landlord education is only required when the borrower does not have at least 12 months previous landlord experience on a purchase transaction. Lastly, I want to highlight that our existing Choice Renovation offering provides the option of a no cash out refinance mortgage to pay off short-term financing that was used to finance the ADU renovations. This includes the addition or renovation of an ADU that is completed by the note date. Affordable Policy will provide more details shortly. Thank you for the opportunity to speak about our expanded ADU rental income policy, which can be found in Guide Section 5306.3. And with that, I'll turn it back to Kelly.
Thank you, Julie. Great information. Appreciate you sharing that with us. Now, Jeremiah Cruzen, he joined Freddie Mac in March of 2011 and started in servicing operations as a loss mitigation supervisor. Since then, he has spent time in various roles throughout the company, including as an operations policy senior in servicing policy, an affordable credit policy risk analytics senior in affordable credit policy, and most recently, a customer credit manager. The third and final market ask that we concentrated on was the payoff of short-term debt to pay for previously constructed ADUs. We already allow this today in our guide, but we revised to specifically call out this flexibility.
I appreciate the introduction, Kelly. As Kelly mentioned, the third and final market ask was for a solution that can be used to pay off short-term financing that financed ADU renovations. Freddie Mac's Choice Renovation offering, which was originally announced in 2019, allows lenders to deliver loans to Freddie Mac where the borrower uses the loan proceeds to pay for renovations. In our selling bulletin 2021-27, we updated the eligible uses of mortgage proceeds to include the payoff of short-term financing that was used to finance prior renovations. Now, as part of the ADU expansion, this flexibility was revamped to specifically mention its compatibility with paying off short-term financing that financed ADU renovations completed prior to the note date. Here are some of the requirements from a high-level perspective. The borrower on the choice renovation mortgage must be the borrower on and obligated to repay the short-term financing. All renovations that were financed by the short-term financing must also be completed prior to the appraisal, and the appraisal must reflect such renovations having been made. The mortgage file must contain copies of all relevant documentation. The appraisal report that's obtained must only be completed subject to completion of any proposed renovations that are also being financed with the choice renovation mortgage. And lastly, the choice renovation mortgage may not be secured by a manufactured home or Choice Reno Express mortgage. More to come on Choice Reno Express shortly. Worthy of also mentioning, the choice renovation offering can also be used to finance proposed renovations, including adding or renovating an ADU, including a manufactured home ADU.
Jeremiah, that is a great segue to our choice renovation offering and all of the opportunities that that offering provides to support affordability, housing supply, and sustainability. Can you give us an overview of both the Choice Renovation and the Choice Renovation Express offerings?
Gladly. The choice renovation offering, which includes the Choice Reno Express option that was previously mentioned, can be used to finance renovations that will be completed before or after delivery to Freddie Mac. In our Selling Bulletin 2021-27, we introduced the Choice Reno Express option, which is a streamlined option intended for borrowers looking to finance relatively small-scale renovations. With its introduction, the Choice Renovation offering has 4 potential paths for lenders to consider for maximum flexibility. The 4 paths being choice renovation mortgages with renovations that are completed before delivery to Freddie Mac, choice renovation mortgages with renovations completed after delivery to Freddie Mac, choice Reno Express mortgages with renovations completed after delivery and located in designated duty to serve high needs areas. And lastly, choice Reno Express mortgages with renovations completed after delivery and not in duty to serve high needs areas. As you can see on the slide, depending on the path, the requirements may vary by completion date, finance renovation costs, location, whether Freddie Mac approval is required, and if the loan must be sold with recourse. Please note, the maximum finance renovation costs for choice renovation mortgages that are secured by manufactured homes may be different. Please see our guide section 4607.8C for more information. Also, for more comprehensive side-by-side comparison of the paths mentioned, please visit FreddieMac.com. Kelly, would you like to go ahead and close this out?
Great. Thank you so much, Jeremiah. I had such a good time finding these quotes for this presentation. But all kidding aside, we take learning and growing through policy development as a continuing process at Freddie Mac. When we develop a new offering or flexibility, it captures where we are now in reviewing the ask. As we monitor, review performance, and receive market feedback, it informs our next steps. An example of this is choice renovation. We rolled out choice renovation in 2019. We updated it with concurrent transfer of servicing in 2020 and updated it with Choice Renovation Express in 2021, and we're reviewing updates for the end of this year in 2022. I expect our ADU policy will go through a similar evolution. We look forward to learning from the market experience, reviewing performance. Thank you, panel, for sharing your expertise. And a big shout out to the attendees. I hope you enjoyed this session and learned a couple of items that will help you deliver more of these types of loans to Freddie Mac to increase housing supply, promote affordability, and further sustainability. Thank you again.
Thank you to our presenters for such an informative session. We will now be taking questions. If you have a question, please use the Q&A box at the bottom of your screen to submit your question. If your question does not get answered during the session, someone will follow up with you after the conference. With that, let's get to our first question. Randy, I believe this is a collateral question. Is a finished walkout basement with a bedroom, kitchen, and bathroom considered an ADU when there is also unrestricted access, for example, an open stairway without a door, from the primary dwelling unit?
Well, actually, the answer to this one specifically is no. A defining factor of an ADU is its independence from the primary dwelling unit. So in this scenario that was just asked, the basement is not fully independent since access to the primary dwelling unit is not restricted, providing no means of privacy.
Great, thank you for that answer, Randy. The next question we have, can projected rental income that will be generated from an ADU on a Subject 1 unit primary residence be used when qualifying the borrower for a mortgage? For example, when the ADU is being added or renovated using choice renovation mortgage proceeds. Julie, can you take that one for us?
I can, Alicia, thank you. For the rental income to be considered in establishing the debt payment to income ratio when qualifying the borrower, the income must be received no later than the first mortgage payment due date. If the lease does not require a monthly rental income payments to begin before or on the date of the first mortgage payment due date, for example, due to an ADU undergoing construction or renovation, the projected rental income cannot be used for qualifying purposes as the monthly income calculation will be inaccurate.
Thank you, Julie, for that. We have, looks like, one more question today. If choice renovation mortgage proceeds are used to add a new manufactured home ADU to an existing site-built property, does the maximum financed renovation costs for manufactured homes described in Guide Section 4607.8 apply? Jeremiah, I'm thinking maybe you could help us out with that one.
Yeah, definitely. So ultimately, no. The maximum finance renovation costs for manufactured homes that are described in Guide Section 4607.8 do not apply. So when a manufactured home accessory dwelling unit or manufactured home ADU is added to an existing site-built property, the total cost of finance renovations would not exceed, for purchase transaction mortgages, 75% of the lesser of the sum of the purchase price of the property plus the estimated cost of the renovations, or the as completed value of the property as determined by the appraiser. And then for no cash out refinance mortgages, 75% of the as completed value as determined by the appraiser.
Thank you so much for that, Jeremiah. And thank you all for joining us today. If we did not get to your question, someone will follow up with you after the conference. Your opinion is important to us. Please take a few moments to take our brief survey so that we can continue to bring you timely and relevant content. You can also log in anytime after the conference to play back this or any other session. Thank you and enjoy the rest of the conference.
Hi, everyone. I'm Tim Kitt, Single Family's Head of Pricing and Execution. We want to thank you all for attending the 7th Annual Connect Conference. It was so great to see so many of our industry partners again in this virtual platform. As we stated at the start, we hope you're leaving with new ideas, new skills, and a whole lot of momentum to advance the work that you're all doing to make this industry even stronger. Thank you for joining us and for making the event a success. We shared with you the insight into the regulatory environment from our fireside chat with FHFA's Director, Sandra Thompson, and our own CEO, Michael DeVito. We're all very excited by her enthusiasm and her commitment to expand our mission to make home possible. A huge thank you to our sponsor partners, both our title and premier sponsors. This event would absolutely not be possible without your support. Our theme this year is The Power of Two, helping you to successfully grow and manage your business. Our goal was to provide you with better insights that will lead to better business outcomes and we really hope that we've succeeded in this regard. Please help us make next year's Connect conference even better by completing the post-event survey, and we all look forward to seeing you again next year. Thanks so much.